comment of the year goes to none other than Left Wing Wacko. He says he works for one of the hedge funds, spreading misinformation. All of these clowns get their talking points every morning from the same source, Can Griffin. Take a look at this. This just rolled on CNBC earlier today.
Joins us now with more on what sounds like a little bit of a familiar trend, Leslie.
Yeah, I feel a little bit like a broken record these days, Mike, but beating the market, not an easy feat in 2021. However, a basket of popular hedge fund longs didn't even come close. Goldman Sachs's basket of the 50 names that appear most often among the top 10 holdings of hedge funds, its so-called VIP list, returned just 11% last year. That's about a third the return for the S&P 500.
Hedge funds underperformed the S&P 500 by over 60%. So I'm going to leave that right there. Let's get into exactly what is going on with AMC today. The real reason why tech stocks in general sold off massively. AMC actually did very well if you're comparing AMC to something like Affirm that closed down over 10% or Snapchat that closed down over 5%. The list goes on. And AMC down 3.88% in regular trading was not all too bad. And what is going on here, and what you probably won't hear in any other YouTube video today, is the reason why AMC is actually going down. The tech sector in general. It is because the bonds have actually been falling, so the bond yields have been shooting through the roof ever since the start of 2022. And what makes bond yields go up? Treasury bonds are just like dividends. They pay a set amount. If people start selling those bonds, just like if people sold dividend stocks, the stock price would go down or the bond price would go down. The bond yield would go up, just the same way as a dividend stock. Well, when bond yields are going up and investors are selling out of bonds, that is somewhat, normal, right? In a normal market. But when you have fears of high inflation, nobody wants to own a bond that will yield you 1.6% if inflation is expected to be, say, 4 or 5% next year. You sell those bonds. So that makes investors in general fearful. It creates higher expectations of inflation. And what are the stocks that go first? When there is high inflation, the risk of the Fed, well, I shouldn't even say a risk, basically confirm that the Fed is going to at least raise interest rates once or twice in 2022. People sell off your tech stocks. Great companies for fair valuation still get sold off. And that selling then in turn makes market makers, hedge funds, go ahead and short those stocks as well because they're already being dragged down by external factors. So that is really what is going on right now. And if you look at the actual bonds, you look at TLT, the 20-year treasury bond, you can see that we have been selling off. And the lowest point we hit today was about $142.75. We did close up about $1 away from that low. So we have seen a little bounce. And that's exactly what happened with AMC. At the lowest point of the day when TLT was at the bottom, AMC was also at the bottom, down over 6%, did hit that low of $24.64 per share. The bonds did slightly recover about $1, as you can see right here, and they are in after hours right now. So did AMC. So long story short, once the bonds actually start to level out and stop making a big move to the downside, that's when you're going to see the reversal in a lot of these more risky stocks, your tech stocks. If I were to call out where we could possibly go, theoretically, just do a little bit of technical analysis on the bonds. It does look like we could hit this low at about October 11th, my apologies. And we would see a continued sell-off in the tech sector. It looks like we're seeing a strong bounce, so I don't exactly expect that to happen, but it could happen. So keep that in mind. This is not going to be a telltale of what is going to happen into the future, but watch this tomorrow and throughout the rest of this week. Ultimately, I still do think a secular rotation is going to happen into AMC and the small cap and mid cap stocks alike because these hedge funds, they are underperforming the marketplace. And the top stocks that they picked, the top 50 stocks, only went up 11%. So if they want to keep their customers in their hedge fund and to keep this money in their hedge fund, they have to start producing some kind of returns. If you're invested in the same 50 stocks as last year that underperformed substantially compared to the S&P 500, you have to change that up. And a way to actually get better returns is to invest in these small and mid-cap stocks, but good companies, ones with fundamental stories behind them, as well as a possible short squeeze. Sounds a lot like AMC stock. And they have been shorting all of these mid-cap stocks into oblivion because they can, right? Eventually they'll have to cover and it'll force these stocks to go back up. And even though the shorts in AMC are not going to cover likely anytime soon, it's still going to help bring up AMC. Market makers, they can work to the upside, to the downside. It's going to help if the markets do react bullishly either way. Now, as far as AMC is concerned, we have obviously been in this wedge that I have drawn out in many, many videos. I'm not going to do it right now because we have broken that wedge. Actually, I will go ahead and do the bottom, the higher lows. And we obviously broke that trend right about here. Today was a clean break of the trend down to about $25 per share. We went under 25, but we did see a lot of support around $25. The aggressiveness, for lack of a better word, or the velocity of the sell-off, I should say, did start to slow down dramatically around $25 per share. So it does look like we will likely see the sell-off slow down, if not see a slight bounce off of $25 per share. This inverse head and shoulders pattern does not fully just evaporate and get that confirmed break to the downside until we do retest these levels at about $20 per share. It is very possible that we do go to about $23 per share, possibly tomorrow, if the bonds do continue to fall and the rates do start to go up. At one certain point, investors will start buying bonds again because the rate will have went up so much, and then people will relax, calm down. So that was a quick lesson on macroeconomics, and that's what to expect with AMC stock. I do think a little bit more downside is coming until those bonds do reverse themselves. And once that happens, I do think you're set for a big breakout. We are seeing lower volume again. We've only seen the high and low 20 million for volume over the last two trading days. Today we did see 33 million shares that did trade hands. Still super low volume, and once that volume comes back into the stock, that's when you're really going to see the big moves and the big increase to share value. It doesn't really matter what's happening as far as the price action on a day-to-day basis. We're seeing low volume, so not too much is actually happening. It would be a different story if we were seeing 60, 70, 80, 90, 100 million shares that were trading hands and seeing this drop. That would not be good. But we are seeing the MACD is still incredibly bullish. I can't believe it's still bullish, a matter of fact. And that's obviously a good sign. It still shows some resemblance of bullishness. Taking into calculations, volume, velocity, price action move, it's still bullish. So that is really good right there. If we pull up the Bollinger Bands, and we do have those pulled up, you can see the 20-day simple moving average is still that level that we do have to break out above at $27.80 per share and see a clean break above that, and really above about this 200-day moving average as well at $33 per share to signal that big rally is coming. If we can get a clean break above the 20-day simple moving average, that's good, but we still have to break out above the 20-day simple or 200-day moving average. So that's basically the scoop. Not too much else to actually add. I do expect a little bit more downside before this is all said and done. Now let's get straight into the data that you guys need to know. As far as the ortex data, we are looking at about 0.04% short interest of free flow, 87.48 million shares that are sold short. Currently, short interest change of positive 0.62%. Share utilization is surprisingly going down at 75.53%. Days to cover at 2.4. This has ticked up a little bit, and this is still, like I say all the time, a ticking time bomb. As far as the actual option activity, quite depressing to say the least. Only about 4,000 calls that are in the money expiring this Friday, 117,652 options that are expiring out of the money. I did buy an option for January 14th, 2022, a $35 call because I think that is quite reasonable, and we could hit that if we do see this reversal actually kick off and go into full effect. I thought it was already going to happen, so that was my fault. I will own up to that. It didn't happen how it should have happened. But that's not to say it won't happen. And if you are somebody that is just gambling on the weeklies, just mindlessly buying calls, expect to lose money. Always put an amount you are willing to 100% lose if you're trading options in general, but especially with AMC, we see a very large amount of contracts that expire out of the money every single week. And the last thing I want you guys to do is just mindlessly buy these calls expecting them to make money regardless of who is saying what. Never believe anybody. Always take in the information and come to your own conclusions. But January 21st, 2022 is looking quite juicy. About 500,000 contracts that are out of the money on the call side, 108,000 calls that are currently in the money. So that's looking good. A total amount of puts is about 380,000 puts on that expiration. So a substantial amount of calls relative to puts, and that is definitely a good thing to be seeing. As far as the max pain, $28 per share. So that would be a move to the upside. I honestly wouldn't argue with that one bit as of right now. So that's basically all you guys need to know. That's what's important. Save you guys the BS. Let you get on with your day as fast as possible. So hit that like button for me. Consider subscribing to the channel. Let me know what you think about this information down below in the comment section. If you guys want access to all of my trades in real time, check out that link pinned down below in the top comment in the comment section. Love and appreciate you guys. Thank you for watching. I will see you in the next one.